Hey, good morning. ¿Cómo allez-vous? Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, no, all's good here. Everything's good, man. Everything's good. Thank you for asking. Hey, my name is McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today for you. First Friday of the month, I'm at FX Street, where I've been presenting for 12 years. Cool, huh? So the goal here is I'm here to earn your loyalty and respect by teaching you everything that I've learned over the last 15 years or something of trading Forex, with the overriding goal of helping you become a skilled, successful trader that is patient and disciplined, that has a long-term point of view of their trading career. And with this success, you will choose TradersWay to be your prime brokerage for your successful Forex trading business. We can be business partners for years and years and years and years and years. Hope you don't mind me being up front. That's the idea, guys. I hope you buy into that vision. So we got sound, we got charts, everything okay? I think so. Yeah, right on. Let's go through some of the analysis. This is USD yen. Five-minute chart. We drew this yesterday, but this was in the discussion of we can't buy it because for whatever reason we said this yellow zone was unviable, not even viably, right? Trying to get this out of the way, whatever. Right? Do you guys remember this? We only had one conclusion, one solid conclusion. Cannot buy it under any circumstance. Then we said your other options are not do anything or sell it. That conversation, I don't think we'd even done this drop yet. The drop probably started at the 8:30 news, right? Right? We talked about what is your trigger. Do you wait for a lower low here? Do you trade it like a top up here? And what I drew, again, before this happened, I said, well, one of the things you could do is wait for a break low below the support. Oh, we hadn't even done the double top yet. Okay. But I said one of the things you could do is wait for the break low below the support, wait for a retracement, and use the confluence of pivots as your new resistance, and you would drop it. This is a 5-minute chart. What do you think of that? Now, the point I'm trying to get across is this is the most conservative of the plans. Right? Not the aggressive one. This is the most conservative one. Because remember, you could trade it high. You could do this little dipsy-do. This one here. That's actually very, very, very tradable. Right? Or you wait for the actual break below the pivot cluster, which is the most conservative And yet it still behaved in very predictable ways. And look where it stopped. Okay? It's a 100 pip move. Right? So I want you to like grab these little gems. What did we discuss? What it did is inconsequential. What you want to walk away with is the knowledge. What did we discuss? How did we put it together? Because really the reasoning goes back to much higher time frames. That's a 5-minute chart. But look, this is really what set it up. You see this, guys? That's the money shot. Oh, morning, Bedouin Adam. He had no fly zone, sort of, right? But this is where it's all set up. Hey, Guy. What you do here, like if you didn't have this yellow zone, your trade plans are irrelevant. Because a bull would have kept buying, and maybe it went up a little higher to this 1480 area. 115 maybe for a split second. Okay, fine. Okay? And if you're a bear but you didn't see any of this, I don't know if you would have had the conviction. You certainly wouldn't have been waiting on a 5-minute chart, right? And if you think about it here as well, what if you had just shorted it and put a stop up here and you had 150 to 200? It's not the best way, but that's what a bank would do. Sure, Joe, yeah. Yeah. Well, I'm going to put a patent on yellow lines. Actually, to be honest, I don't like the yellow line. I'm getting sick of it, so let's just change it. I can't even grab it anymore. See, I can't even see it. So far away. Okay. So this is strategy, what we're talking about here, right? Remember the book, right? Strategic and tactical Forex trading. What I mean by strategy is I look at this area and I say, I cannot be a bull, therefore I'm either neutral or bearish. But that's a strategy, right? What are you going to do with this market? Oh, I'm a seller. Strategy. That doesn't put you into a trade. Then all of a sudden we're on a 5-minute chart. Now what? Well, I already know I'm a bear. So the rest is tactics. So whether you decide to, sell it high, wait for the midpoint psych level, wait for the break low here and fib that, wait for the little bit more of a macro move, because really it's on a 15-minute chart if you want to look at it this way, right? Or even an hourly chart. Which one's right? The 5-minute chart, the 15-minute chart, or the hourly chart? It's the same thing. A smaller time frame, like a 5-minute chart, you might have had 3 trades, and you would have squeezed some more pips. Okay? So like I would have, on an hourly chart, you would have drawn it more like this. Okay? But you see, it's the same thing, right? So the tactic part is just how you've decided to enter the trade. So like there's like I could take so that book which I wrote what in 2006 or 7 or 8 I don't know when I wrote it. Anyways, I wrote it a long time ago. This could be a screenshot right out of the book, couldn't it? 2155 cross down. Take the next 5A cross off the 2155, right? Right? I mean that is so classic. It could have been 10 years ago, and this would have been the same chart I was using. You say, well, what? So what? Well, except 10 years ago, you couldn't even trade off your charts. It was like caveman trading, you know? Yeah, it does, right? But what does that tell you, though? Right, Paulie? What does that tell you? If this could have been a chart from 10 years ago, and I haven't really changed my trading at all. I don't have a cool gimmicky strategy of the week, or like, hey, look, I back tested this, check it out, you should buy it. So maybe it's a real skill. It's real knowledge. It's really helpful, right? And that should be, what I'm hoping is that's exciting for you, because you know there must be some level of truth to it, right? You know what I mean? It's a universal truth somehow. Okay? Big move up, pivot. And by the way, this goes back to Monday, isn't it? You see how we said gold would go to 12.20? No, not even. 12.19 and 32 cents. Okay? A couple of things. It was within $1 of accuracy. But look how it drew the fib from this low to this high. Look at the actual top. How precise is that for a 1382 Fibonacci extension? Did somebody drop a nuke yesterday? Well, if it mattered, gold would be up 150 bucks. Gold is doing exactly what we're telling it to do. Look at this, guys. You think that's a coincidence? You're like, wow, that's really interesting. Yawn. Look at some of these things, right? Let's take a look. From the low to the high, back out into a pivot area. Now, I had it as a 618. It's 786. Fine. Okay. Look at these areas here. How it was important over and over and over and over again. Okay. You can see the price action: lower low, lower high, lower low, lower high, lower low. Okay. But then look, like things like this, and I've kind of prepared you this type of year. You get a lot of fake outs where it breaks out and then comes all the way back, 100% retracement back into here. But also recognize, though, like look at the timing of some of these things. This giant explosion didn't occur until after we hit like the hardcore obvious support. What if you didn't know it was a weekly pivot point? It'd be like magic. Yeah. But remember to be grateful for what you have. Remember that this little area here is the predicted bottom for the week. Some people are trading without that knowledge. You might have traded at one point in your career and you just didn't know that. So you should recognize that you know these things now. And if you're not paying attention, or if you're not paying enough respect to this, maybe you sit up and take notice and say, wow, I need to be in on this stuff. Because these are not great trading conditions. But what I'm trying to get to is it's still trading logically and intelligently. The fact that today's top is exactly 100, right? And 38.2% of that price action over here, I think is pretty powerful. And it tells me that the market participants that are participating in the market are trading technically, not emotionally. Which means you can figure them out. And that's good if you're in the business of trading, right? Okay? So for example, the break low and the pullback. Let me reset these charts. I guess I gotta go this way. Okay. The breakdown and the pullback to 12.1932. And 12.1932 just happens to be this high. Do you think that's a coincidence? That after this low, the retracement is $1,219.32 or 32 1/3 cents. Is that a coincidence, guys? I know it's rhetorical, but you got to be involved. You're reprogramming your brain. Now that USD yen chart, didn't we say one of the things you can do if you're conservative is let it break down and then trade the retracement, right? This is what we did on the yen, where we said, let it break down, don't worry about it. Let it retrace. Where? Back in the roll reversal into a pivot cluster. Well, now it's into a roll reversal using a pivot. Same thing. Let me remind you that this is also a 5-minute chart, which many of you would have traded like you could only scalp. Look at that. You had like, what, 4 hours to prepare? What if you simply put a working order here? Well, I can't do it. Okay? But what if you put a working order there so that you say to yourself, all right, it's broken to the downside. It was at a resistance level. This is all where it's going to roll over. So now that it's made a lower low, and because I know lower lows do not exist in an uptrend, this is probably the beginning of a downtrend. So it'll likely retrace back up into roll reversal. I think I'll use this pivot. So I'll drop an order just shy of the pivot and you walk away. You don't even have to wait for the 3 or 4 hour setup. All you're looking for is the lower low in an uptrend at resistance. What do you think? Wicked smart? Check out the Kiwi yen. An amazing coincidence that we're about to make a higher high off of the weekly M1. Amazing coincidence. How'd you like to trade it without pivots again? You want to go back to using no pivots? I don't even like the sound of that. So we got to our no-fly zone. Okay? And we talked about this weeks ago. So I'm going to start tiptoeing short, I think. Okay? This is my permission to seriously consider. Okay? Hey dear, that's a huge one. No, hey dear, I have a very small head. Yeah. It should be no surprise. Okay. So, I think it was yesterday. Were we talking about buying oil? I mean, we were right here yesterday, weren't we? Correct me if I'm wrong. Joe's like, it's setting up nicely. Yeah, it's already taken off nicely. Yeah. But don't get too excited. Remember, it's the wrong time of year for excitement. But it'd be cool if it kind of did this now, if you were a buyer. That'd be cool, right? Is there a fundamental reason for it? I don't know. I don't know anymore, right? It's one of these things where there's no real reason for it to go down. There's no real reason for it to go up. But so there's two places to buy. There's this one yesterday, and then I said the next one is down here. What's the weekly target? $47.64.5. 64.5, Ryan. Gee whiz, cutting corners. It's gorgeous, isn't it? Now, you certainly could have been a bear in here, waiting to sell the high side of it. Remember, we talked about them like really quadruple top, and it still hasn't made a lower low. Like, at some point, you gotta like give up, right? But is there a real setup in here? If you were a bear, you just had it wrong, because I don't want to like pawn it off that I'm always right. So you would have been sitting here going, I wonder if it falls, right? You would have sold it at 45 or close to it. You very quickly would have lost. Should have been no big deal, right? Yeah, 80, yeah. I would have tried to keep it closer to 45, but yeah. I'm thinking more like 90, 95, but it's just depends on how you do it. So if you pull the trigger, Joe, using moving average crossovers and stuff, the penalty you pay is it's a little bit slow. If you said, well, I got resistance here between 90 and 00, and you just drop a limit order, now you're a little aggressive, but you're in at 90, 95, and you don't need a crossover because you sold at resistance, and what more do you need? Now, the penalty for that is you can get in and price never actually respects it. You end up buying in a situation where you just get one giant candle right through resistance and you sold, but it never actually respected resistance. That's the downside of that. There's no perfect way. As long as you understand what you're doing, then you know the risk. I don't remember any of this anymore. But if you were a bear, you could prepare to sell this. Okay? If you're a bull, you've already missed it, so what do you care? But if you're a bear, I'd be sitting on this 5-minute chart waiting for it to roll over. It doesn't look good now, but it might look good in 15 minutes. Or 1 minute? Yeah, you know, yeah, the 1 minute. See, what I would do with the 1 minute is I'd try to let the 5-minute lead first, and then I would cut the corner into a 1 minute. Okay? But anyways, the 5-minute is overbought. Okay? Which is fine. But it's still telling me to be patient. I didn't get kind of the respect I'd like to see off this pivot cluster. But once again, if you know you can't buy it, then at least you could just sit here. And if it takes off to the upside, what do you care? Why does it bother you? If you were so bullish, you should have bought, I don't know, somewhere down here, right? Somewhere. But like now, it should be irrelevant. So if it takes off now and goes up and up and up, and you're not on it, it shouldn't bother you in the slightest. Okay? But mentally, that's hard for people to get to. Just letting it go, like, because you know it's going to go up to here. You're like, well, why can't I get on it? Well, why couldn't you get on it down here? So, my Mexican peso trade that I taught you 2 years ago, 3 years ago, 5 years ago, depending on, I know the video I did probably 2 years ago, but I've been teaching it for quite a few years. Look, yet another peso trade. This is the first Friday of the month. Free Coronas, man. Free Coronas, huh? Isn't it lovely? The part that I like about these types of trades is you know when to be around and you know what direction. Okay? So for example, in this trade that I've taught you, because it's a fundamental trade, there is no possibility of buying. It doesn't exist in this strategy. I mean, it's cool, right? And when do you look for this trade? The first of the month and that first Friday, which is the payday. So it's the first of the month, first payday of the month. In that window, sometimes it's only a day or two, sometimes it's the same day, but it all comes down to when people get paid. You know that, right? So the whole thing is you know when to look, you know what direction to trade, you just don't know if it's going to set up for you. But I think some of you have been tracking this for a while now, and I think for those that are doing that, you're finding that most of the time it works. Like almost always. And I like that. Correct, yeah. The banks have to be open, right? Because it's not just the people standing in the line at Western Union. The bank then has to transfer it as like a block trade, right? But I like stuff where you use your watch or your calendar or whatever. I like logical, intelligent trades. This one, a little choppy, huh? Well, we had the meeting and stuff yesterday, so you have to decide what you want to do. Is this a good opportunity to buy? So what should you be doing now then? Correct. Either setting up a sell or walking away. What does the oscillator tell you? Well, it's a 30-minute chart, so let's do it. I guess it doesn't matter either way. But yeah. That means oil might go up to the next level, right? So that means Grandma Yellen's going to come out and be hawkish. She's going to say, this economy is on fire. This economy is on fire. Yeah, she's going to play at the grand piano, pull out an Alicia Keys, remix, right? So she's going to talk hawkish, she's going to talk bullish. Well, dollar strength, maybe not, maybe doesn't have to be. See, the thing is, the dollar play, or let's say, let's not talk about the dollar. Let's talk about investing. Okay, you're a $1 billion portfolio manager. You can buy into investments globally. Now, haven't we already bought up the United States over the last 8 years? Like, aren't we at all-time highs in the stock market? Like, what more are you going to buy? So where's the deal? If you find out that the Fed says our economy is improving, you could extrapolate and say, well, therefore, the rest of the world must be doing better as well than they used to be, right? Like, things are just improving. The Fed has to keep raising interest rates. We're not being dragged down by Europe anymore. So if things are good here and you got money, but everything here is expensive, you say, well, maybe I got to get into Europe. Maybe I got to get into Malaysia or Indonesia or China or India. Or like, you got to put your money to work because you're already overexposed here, right? You bought everything you need to buy in the United States. So just good news here says, take the risk. You can do it. And it's sort of a green light for the rest of the world. See, if things are bad here, like if Grandma Yellen comes out and says, well, things are okay here, but Europe, but Brexit, but the Chinese, but geopolitical risks in the Middle East and in North Korea, but there's so much holding us back. Okay? Then that's one message. But if it's just like, boom, we're hot to go, HOTTOGO, then I think that'll be green light for other things. At least on the short term, and maybe things like oil, CAD, I don't know. So yeah, we got to just be careful. Because we got to be careful. Like when the dollar was ripper strong, what were people buying? I mean, over the last 8 years, what were people buying when the dollar was ripper strong? We were talking about parity on the euro. What was going on then? That wasn't last year. That was the year before that, year before that. Okay. And to answer Ryan's question, so you reckon oil will be, go up because hawkish economy and more demand in the future? Well, that and we're just at a bottom. We hit 42 last week. Now we're bottoming out at 44. Like, that's a higher low. It's just money to be made. What does that mean? It might go up to 50 and then come back down. I'm just talking this week, right? But why was the dollar strong 5 years ago and 4 years ago? Come on, guys. I want to see answers here. A recovery from that doesn't mean anything. Come on. Give me, what were people buying? Tapering. Yeah, well, actually, that was sort of the beginning of the end. Everything was cheap. Yeah, but be more specific. What were... Even before the stock market went up. Before even that. Property, bonds. Bonds. Don't you remember the 10-year T-note at like 1%? The whole world bought U.S. Treasuries. They bought U.S. Treasuries, but the U.S. economy sucked. Okay? You see what I mean? Now the economy is good. Do you want to buy bonds? Not if you think the price is going to go down. Because every time the Fed raises interest rates, they lower bond prices. So now you're buying a falling knife. That's right, open market operations. So if the economy is good, the dollar can weaken. Okay? Now, why does the dollar weaken if the economy is good? Americans have good jobs. Right? It seems backwards, right? When the economy is bad, the dollar is strong. When the economy is good, the dollar is weak. Because they're investing in foreign countries. Nah, come on, they're buying Bart Simpson t-shirts from China. And plastic folding lawn chairs to take to the beach. Yeah, there you go. Imports. Which means they're exporting the dollar and importing crap. Pardon my French. Okay, let's turn around. They're buying AMGs, AMG 65s, right? And Ferraris, and not no stupid California. Which means you're going to need euros. What kind of idiot buys an Italian Corvette? How embarrassing. Yeah, that California, that Cali, Ferrari, California. So anyways, some people have low standards, that's all. All right, so anyways, just bear all these things in mind because we get, like that can be easily confused by someone newer to the market. Where you're like, the economy's good, the dollar should be strong. Whoa, 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 whoa. Whoa. Let's go back 10 or 15 years, when poor people in America were driving brand new Cadillac Escalades. And strippers owned 5 houses. Because they didn't even need to show income, they just had some cash. Right? You have retired people, no job. They're 65 years old and they're buying a house with a 30-year mortgage? You're like, what? These guys are going to live to be like 100? And they have no income because they're retired? Like, so what were we talking about then? The economy just ripper strong, everybody filthy, stinking rich. What were we talking about? The dollar ripper strong? No, we're like, oh, the dollar's going to be worthless. It's going to be replaced by the euro. The renminbi is going to become a reserve currency. Like, what a bunch of babbling idiots, huh? This way you got to turn your TVs off. You're like, what a bunch of idiots. So anyways, yeah, no, everyone was rich and the dollar was weak. Then the economy collapsed and we're like, it's the end of the world. It's the end of capitalism. We're all going to work in coal mines for some big communist government corporation that owns everything. Like, whoa, 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 whoa. That didn't happen either, but the dollar was strong. When it was the end of capitalism, when it was the end of the free world, the dollar was strong. So when everyone's rich, the dollar's weak. When everyone's poor, the dollar's strong. So if Grandma Yellen says everything's awesome in the United States of America, does it mean it's strong dollar or weak dollar? Well, that's for us to figure out, huh? Yeah. So anyways, hey, peace on earth. May the pips be with you. May your profits be above average. And trade safe out there, huh? See you tomorrow. I hope you'll be here tomorrow. Thank you for being on my team. I appreciate you.